I'm Marc Singer. I'm Dean for the School of Undergraduate Studies here at Golden Gate University, and welcome to Back to the Basics. I am really excited to have two guests today to talk with us about all kinds of things that are happening in the tax industry. That's not what we call it, though, right? It's not the tax industry. It's the. Do we say that? All right, we can say that. All right.
Works.
Yeah. All right. The tax industry. All right. So I'm joined with. I'm joined by Stuart Hicks, who's a partner at Krohn, and Hicks LLP, or KWH, as we might try to say, because the rest of that's long.
It's a little long.
Yeah, it is long. Yeah, and then also with Raj Gupta, who is with Moss Adams, and he's published. I'm going to actually read your bios here. So
cringeworthy.
Yeah, no, they're great. I made them up myself. So see if you like these. So Raj Gupta has practiced public accounting since 2009. He specializes in partnership taxation, including complex partner allocations resulting from property and partnership interest transfers. He has extensive fund experience, including private equity funds. Am I right so far?
So far, pretty good. I'm impressed I can do that.
Thanks. Yeah, no, funds of funds and other types of alternative investments. And he advises on matters related to taxation and organizational structure, right? And there's a lot more that we'll be talking about as we go. And then Stuart Hicks, as I mentioned, is a partner at KWH. See how I just worked that in there? And he provides tax consulting, planning, and compliance services to high net worth individuals and families, as well as business entities. Industry focus for Stuart includes real estate, technology, and hospitality. But before this, he worked as a tax manager at Moss Adams in the corporate tax group. Is that a coincidence? Like, did you guys know each other at Moss Adams by any chance?
We did. Yeah, we worked for several years together. Raj and I were probably top competition over there. We like to compete.
Yeah, we'll leave it at that. Stuart won and he left. But
he left.
we're good buddies. And
That's debatable.
Well, usually the loser leaves, right? Isn't that? He gets forced out and he has to go start his own company or something.
Not in his case.
Anyway, no, it's great to have you guys here. Just a little bit of housekeeping I want to mention. Our excellent producer, Joyce Martin, just posted for everyone in the chat. You've all been muted, all the attendees. If you have any questions, notice that this is a little different from all of the endless numbers of Zoom calls that you've been on today. If you look at the bottom of your screen, there's a Q&A next to the chat. So if you have questions for our guest today, please post them in the Q&A. All right, and then but you can make comments about anything you like in the chat section. Also, Joyce has posted the LinkedIn profile pages for both Raj and Stuart. Although if this goes badly, I think we can delete that, right? That's not a problem. Okay.
And Mark, I would just say I would encourage everyone to post some questions. Stuart and I can ramble on and on about things Mark's going to ask us. So we want to make this relevant for the audience. So if you have stuff for us, type them away, and we'll move them to the front of the queue.
Yep.
All right. So right away, someone's asked if there are any handouts. I mean, we weren't able to make copies for everybody and then get them to you on time. So we will be posting some follow-up notes when this is posted online. This will be available on our YouTube page. And anything we refer to today, I'll definitely put links there to either documentation or web pages or anything like that, as long as I remember to write them down as we're talking. All right, so there's a lot to talk about, a lot going on in your world, a lot of changes in the last 8 months, but really even before that stuff was happening, wasn't it? And I just want to tell everyone who's attending right now that I am not an expert in tax matters, so I will be asking these questions basically from the level where I currently sit. So but you all should feel free to go into more detail than I'm capable of understanding if you feel like that's useful in this case. Okay. So why don't I start with the question that I've really been asking everybody, and I'm assuming you guys know each other well enough to not interrupt each other. Like you'll just give each other space and there won't be a fight or something.
We'll try.
All right, trying. Let's see what happens. It could be otherwise. But obviously, the pandemic has affected everyone and the way we work. Could you talk a little bit about how it's affected, the work you've been doing since March?
Yeah, I think in terms of general trends, Raj and I were discussing this in terms of the client focus for us has been a lot of, for me personally, debt restructuring and cash flow management for my smaller businesses. The clients are looking at us more as advisors than they ever did in the past, not just tax advisors, but business advisors, which is we've had to somewhat pivot. And on the debt restructuring side, for me personally, that's taken up, I'd say 20% of my summer. And that's working with a lot of real estate businesses and hospitality businesses, whether it's PPP loans, the SBA program that came out earlier this summer, or actually late spring, or just traditional bank debt restructuring. The advisor relationship has much more strong throughout this pandemic. They're looking to us for a wider subset of questions. I don't know if that's relevant to what you've seen, Raj, but we're looked at differently than in the past. We're not just tax code advisors.
Yeah, and 100% what you said, Stu. I think, Mark, your question, we'll kind of, you can take that in so many directions. How has the pandemic kind of affected our business? I mean, our people internally, externally, Stu took it in the direction of clients. So we'll focus on clients for now. And I think at some point we'll talk about people.
Yeah.
But yeah, I mean, it kind of, Stu hit it on the head. And that's what I was going to say is, prior to, we always like to pride ourselves on being business advisors. You'll see a lot of people in the industry throw that term out. It can't be more true. Even if you don't want to be a business advisor and you truly want to churn out tax returns these days, I think everyone's forced to be a business advisor. Our clients, they're scared, they're nervous. They don't know kind of what's going to happen. They didn't know in March what was going to happen for the next 8 months, nor did they know what's going to happen in 2021. So the first person they call is their CPA saying, hey, how do we cash plan? PPP loans, there were, I don't want to call them amendments, but new guidance being issued on a what, Stu, weekly basis?
Weekly basis. Yeah.
Right.
Weekly basis.
I mean, I just stopped after like week 6. I just stopped. I was like, I can't, this is a full-time job. Right. So it's like, we had a think tank at the firm that was handling a lot of that, but that's what I would say. It's our clients want us to be, they were much closer to us during this pandemic. Zoom has made that possible. And I'm not throwing a plug to Zoom, whether it's WebEx or whatnot. These video chats have been great. I mean, we all have fatigue from them, but it kind of allows us to connect with our clients a lot easier than prior to picking up a phone call and just kind of having a 5-minute chat.
Really easy.
Well, it feels more intimate. Yeah, it's much easier now.
It does. And, Stu, yeah, it's when you can see someone, imagine doing this just over a phone call. It's just much more difficult. You can't read body language. Now, when you're giving a client advice and you're saying, hey, you're going to have a tax bill, you can see that look on their face, and you're just like, oh, should I maybe preface it with something? I don't know, Stu, if that's accurate for you.
Yeah, the WebEx, Zoom, whatever it may be, that has risen incredibly. I maybe had 2 Zoom calls a month prior to this, to be honest. And now I'm having probably 3 at least a day. And that's with clients. Not only, I mean, we've got them internally too, which is a bit exhausting. There's overload there, but we're adjusting to that. This type of format has helped significantly with client advice and really understanding that body language, as Raj alluded to. It's helpful because not all clients want to come into the city and meet with us even in non-pandemic times. So I think that trend is going to continue on. We're going to have more of this moving forward. It just makes sense, and it allows us to reach a wider audience as well from a client side.
So yeah, I've talked to people who are in the healthcare field who say that things like telehealth are going to be a permanent part of their operations from now on. Are you seeing something similar in your field? Like, do you think this will stay even when the pandemic is over? The Zoom, the online interaction?
Yeah, I mean, I think so. I mean, there's, again, 2 parts to that, whether we're talking our people internally, office space, whether we're going in, staying at home, or we're talking clients, but just kind of focus on the client side. Getting feedback from clients, they would much prefer not spend the hour back and forth wherever they're located in commute time. Right. When you get onto this, you can share screen, instead of kind of looking at documents separately, you can kind of share screen, walk through work papers, planning, and all those type of things. And it just saves everyone time. So I do think people
Yeah.
will be doing this more. Maybe I'm in the minority on this one, but I miss being in the office. I miss seeing my clients face to face and not behind a screen.
Yeah.
So at some point when it's safe to do so and people, we're able to do so, I'd like to start kind of bringing that back a little bit, but I'm not sure how all of our clients and people feel about that.
I think you're right. I think we'll see a little bit of a boomerang for people actually yearning for that more intimate interaction where you're going to lunch with someone or they're coming to your office. It does have a different feel to it, but I think long term we'll see more of this format than we did in the past.
Hey, question for you, Stu. So, sorry, Mark, if you don't.
No. Listen, take it over, man. I'm good.
On some of your clients that you set up Zoom calls, do you ever have clients coming on and turning off their video because they're just like, hey, I got kids in the back, I got things going on, like I don't want to be on Zoom, or are most of your clients joining via video?
I'd say more often than not, they're joining via video. The ones that turn it off will only do it for a couple of minutes. Maybe they have to step away or the kid came in the room and
Right.
they'll come back online. I see that more so when we've got multiple individuals. So if I'm talking to a group of real estate clients, maybe a couple of people drop off for a few minutes. But most of the time, I mean, people have gotten much more comfortable being in front of the camera, whether they're using an iPad, a laptop, a phone.
Yeah. I think I found that to be the case too, although you'll see somebody strategically mute and then they look off screen and they're shouting. You can tell they're shouting something and then suddenly they come back and everything's all back to normal again, like nothing happened. We're a little bit, quicker with we know where the mute button is now. Like at first we didn't quite know where that was sitting.
You have to, yeah.
Yeah. So what about, you sort of mentioned this a little bit, but not just with your clients, but what about the way your offices are operating? I mean, so I know, Stuart, I think you mentioned that some of your folks go to the office, if I understand right. So
yeah,
is that necessary or is there a change in the dynamics within the office or just how your work gets done?
The staff members that come into the office purely by choice right now. We aren't requiring anybody to come back. I go into the office 3 days a week. I'm just more comfortable there. I do enjoy having a couple of days at home where I can have breakfast with the kids, lunch with the kids, but the office, I am able to get more work done. I think some people are much more efficient mentally being within their office space as opposed to at home. And I'm one of those individuals. But I have many staff that prefer to be home right now. The ones that are coming into the office, we have a location downtown San Francisco. The ones that are coming into the office live downtown. And so maybe they don't have a comfortable setup at home. That's really what we're seeing at our office. I have a couple of admin staff that come in, and that's only because we do quite a bit of trust and estate work. Estate returns have to be filed by paper, and so you have to actually come in, compile that paperwork. And then as we receive information from clients, a lot of clients will still send a paper tax organizer a copy or their original documents of all their tax forms, and so we have to have somebody in-house to process that.
Wow. No, is Moss Adams doing the same thing, Raj, or are you doing? Are you going? It sounds like you're not going in.
Yeah, no, I'm not. And as soon as the pandemic hit, we basically no one could be in the office. The offices were shut down. And large firms, so it's kind of like we're not just managing San Francisco. It was kind of like for the entire firm all the way. We have offices through Texas. There was basically like a shutdown, and then I think end of July, we started reopening, or maybe it was August, like 10% capacity. So there was some formula they came up with, but we have limited amount of people that are starting to trickle back in. I might be starting next week to go in once a day, once a week, twice a week. How is it impacted? I mean, that's a long question, and I think we should talk about that at some point. But I would say, yeah, I mean, we have a couple of people going into the office, but generally we have a processor there similar to Stu to get some of the paper filing, some of the large, compilations we need out. Yeah. But generally speaking, everyone's working remotely. And what I've noticed also is in San Francisco, it's kind of opposite to you, Stu. In San Francisco, people are less comfortable wanting to go in the office. We have 0 people as of 2 weeks ago in the San Francisco office versus our suburban offices, call it Fresno, Sacramento, Walnut Creek. People are more interested in wanting to go in the offices there. And I don't know if it's a function of you can drive up, park, get into the office versus San Francisco, you got to take public transportation generally. then you got to share elevators, you a lot of different things. So I don't know the dynamic quite there, but our San Francisco office is getting a little bit less love.
Huh, interesting. It's funny, yeah, because I don't think there's any kind of consensus on what's going to work better. Some companies want to have everyone back as soon as possible. Others are saying, no, we could do this forever. I just wasn't sure if in your line of work, essentially, if there was anything, like you're saying, that the paper documentation still has to be done in paper. So there is still a need for some sort of physical presence. But not so much in terms of your ability to work with each other. That's not as much of a factor.
Ability to work with each other and need.
Yeah.
I agree there isn't a need, but I will tell you this, like, our young people are struggling. Yeah. And you can ask them up and down right now, right? First of all, let's talk about the first year people that join the firm. They join the firm, they're working hard, right? Public accounting, everyone knows, the first few years, you're working a lot. And part of what gets you through that is that camaraderie with your peers, with teams, seniors, managers, partners. And you're not getting that working on a laptop. You can have 100 Zoom meetings a week and you're just not getting that. And I think that's causing burnout and people are getting more frustrated. And so I think there is an impact on people when we're talking about this. I do think eventually when it's safe, people are going to want some sort of, whether it's once a week, twice a week, get in, see faces, high five, grab a happy, whatever it is. That's part of the culture in public accounting. Thursdays hit, Fridays hit, you go get drinks, and
it's true.
It's being missed on our younger folks.
I think that's one of the biggest problems we're seeing internally is those connections are just not occurring like they used to. I mean, when you and I were at Moss Adams, Raj, we'd go out and we'd get lunch, we'd go out, we'd get coffee, we'd go get dinner, we'd spend time outside of the office, not only there's no opportunity for that. I mean, let alone being in the office and going to get are not occurring, unfortunately. So I think we've got to go back into the office at some point, at least part-time, to help our young folks for training as well.
And just to clarify, when you said we grabbed dinners, it was never past 7 o'clock. Just
that's true. We did have to make it home. Yeah.
Right. Okay. Just making
Good for you. Yeah. I got to add one more thing to what you just said, which is that I am so sick of my family at this point. I mean, I need to have another place to go.
Oh, jeez.
But don't tell them I said that. All right. I don't think they're listening. But you raise another question for me. It's like, I know one of the ways that we know you is there'd be recruiters on our campus, at different events, things like that. And you're talking about how this is affecting some of your younger employees. How has this affected recruiting, recent graduates? Are you still doing that? Can you do it?
Yeah. So yeah, absolutely. And that's kind of one positive. When this first started, we weren't sure what that all was going to look like, right? I think everyone read it on Going Concern and everything what the firms were doing, and we hit the pause button for sure for a hot minute, but I can tell you, we had a full intern class over the summer that came through. Now, it wasn't your typical 8-week internship. It was 2 weeks, it was virtual, but we just finished fall recruiting right now. And we have a full recruiting class getting piped for next year. In San Francisco, we have 10 new hires coming in. So we're actively recruiting. And I would say we're recruiting at all levels, whether it's staff, experienced staff, senior manager, wherever there is a need and we find talented people, we absolutely are recruiting. And, Mark, I know you know this, but I'm the tax department leader in San Francisco. And constantly, this isn't just words. We're looking at resumes. I have 2 interviews tomorrow with experienced people. So there's truth to it when people say, yeah, the market took a hit. Businesses are affected, but firms are still pushing forward and they're still, optimistic about the future. In our firm, we're still hiring. I know, Stu, in our conversations, very kind of similar with you.
Yeah, similar with me. I mean, we're always looking to add people. We aren't being quite as aggressive this summer, to be honest. We have more business than we've had in the past. And Raj, I assume it's similar for you because we've added a lot of this consulting side of the equation. And with tax law changes over the summer, I mean, we've got a lot on our plate. Recruiting has taken a little bit of not a back seat, but it's not as in focus. We on average will add 1 to 3 people per year. All right. And a much smaller firm than Raj's firm. But same as Raj, I have an interview next week. I don't have any this week. It's an experienced individual next week. And I would love to add individuals to the firm, either be a green staff who hasn't worked before, a couple year staff, seniors, managers. We always want to hire good people.
Yeah.
The pandemic doesn't stop that. It's only increased the amount of work. Therefore, we're going to need more people to fill those seats.
Well, let me ask you this about that, though. It's something I've been thinking a lot about as we're developing our, courses, our curriculum at GGU. But are you rethinking what you look for in candidates? I mean, in other words, has the pandemic or just the way we work, as it's changed what you would look for in your recruiting? Is there some other skill that's now, necessary?
Stu, you want to take this?
Yeah, I don't think it's changed what I'm looking for, to be honest. I think the core competencies of what I'm looking for in a staff member, be it experienced or not, haven't changed. I want somebody who has the ability to learn, that works hard, and is willing to put in the effort to succeed at our firm. The educational background hasn't changed for what I'm looking for. I would prefer to have someone that has a master's in tax from GGU. I mean, that's a fantastic program, but it hasn't changed what we're looking for, I guess, is a short answer.
Interesting.
Can you stop sucking up the Mark?
Yeah, that's not my
you and I both took courses there. We know it's a good one.
Yeah, I only cover undergrad anyway, so it's not working on me. But thanks. No, I'll pass that along.
Yeah, so same with Stu. I don't think, if we're talking about blockchain and other things, potentially that's going to change in the future on the skills we're looking for. I don't think we're there, so yeah. I don't necessarily want to cover that, but I think that's more kind of data mining and all that, those type of skills. In terms of the pandemic, I would say, no, it hasn't. And similar to Stu, work ethic and all those things, those are the things we're looking for. So very similar and consistent to what people have been doing in the past.
Oh, that's good to know. That's good to know. I think you and I have talked about this. Maybe it's been a few months now, Raj, where you said that there's definitely more of a need for, as you just mentioned, like data analytics, right, and data mining. And then also, I think you mentioned like conflict resolution. There's something that's creeping into the job a little bit as well. Or
I'm sure I said it. I can't remember in what context I said it.
It just stuck with me. I was like, oh, all right, gotta keep that in mind. Yeah, just like the people skills, soft skills, I guess.
Totally. And what I was gonna say on that, Mark, you're right. Kind of increasingly, I just feel like what we call is EQ. Like at our firm, there's 3 things we look at. It's drive, IQ, DQ, EQ. And that EQ is a little bit of an intangible. And that's what I call like conflict resolution. Can you read a room?
Yeah, that's how it came up. Right.
Are you able to are you able to navigate through difficult processes without kind of escalating it to everyone at the firm? And what we've noticed more than folks with the highest IQ and the highest drive, it's folks with really high EQ. They end up being the most successful longevity-wise at the firm. Now, you have to have some baseline drive, some baseline intelligence to get through the work. If you don't work hard, you don't understand the work, there's only so far you're going to go. But really excelling on that EQ part has taken a lot of our folks further and having longevity at the firm.
Interesting. Well, I'm thinking that you both were just describing how people were under a lot of stress. There was a lot of uncertainty, a lot of change. Something like that, what you're calling EQ, would really come in handy in sort of helping your clients. Like as you're becoming their business advisors and not just their tax advisors, it seems like it would be a necessary skill to have there.
Absolutely.
They're looking for us to have a steady hand. Yeah. And in those conversations, we have to help them lay out a path. And that EQ definitely helps. It's something that we always are looking for the next partner, right? You've got to have that if you want to be at the top levels. You don't just have to be a code head. You've got to be able to interact and draw people to you.
That's right. So this brings me back. I wanted to get more back into the actual work you do, although I'm fascinated by what we're talking about now. But is there would you say there's more uncertainty or less uncertainty as things have gone by? I mean, for your clients, as far as their, what's going to be happening for the next year for them, for the, how they're going to structure their business dealings. Yeah. What do you think?
I think on my clients, the biggest uncertainty, or the group of clients with the biggest uncertainty, is the hospitality industries that I work with, both whether it be a hotel or restaurant. Those are my clients that are suffering the most. They were hit hard with shutdowns, and they're not sure how far they can stretch the dollar. The PPP loans really helped out to get them through a couple of months, but they've run through that money already. And so the uncertainty as to, from a pandemic cycle, when are we going to have people come back into the city? I mean, I've got restaurants in the city that they may shut down in the next 3 months unless we get more people at work, right? And I don't know where we're going to go from there. From the real estate side, something that Raj and I both work on, I don't think there's as much uncertainty. My real estate clients are continuing to do deals, continuing to put new money into opportunity zones, development. It hasn't slowed them down a bit, to be honest with you. I mean, I've got, and on the smaller side, real estate brokers or real estate sales, it's booming right now in certain areas, right? Raj, I don't know if you're seeing that on your side. But
I generally agree with you, like across the board. And I would say, I was going to answer the question by saying it's very industry specific, Mark. So depending on what industry we're talking about, yes, hospitality was hit. In the future, it's tough to know. I kind of agree with Stu. My real estate clients haven't really slowed down much. Now, a lot of these large commercial properties that you see in San Francisco, they're still locked into long-term leases. When those leases expire, what's going to happen, right? My view is obviously landlords are going to have to reposition buildings. The way real estate is kind of currently being used is going to be rethought, I think. But I'm not sure yet on how that's going to look. But in terms of our client base, Stu, I think you'd agree. Service providers are a little bit of a lag industry. So we don't feel the hit until about a year or two later that, oh, wow, there's a hit. So we are cautiously optimistic. So when I say like we're recruiting, we are actively recruiting, and our numbers will show it. And I'm telling you right now, we have a start class, but our growth rates used to be we're setting 7 to 11% for a year. We're not targeting that in 2021, right? We have modest growth rates, somewhere, 2, 3, it's hard to kind of model out what it's going to look like. So long answer to your short question, Mark.
No.
I don't know, but I'm not seeing a huge slowdown yet. But it remains to be seen once all the government funding is kind of dries up.
Yeah. No, and we've, I think we've been reading about how many restaurants in San Francisco and the Bay Area generally are closing. And then the other thing I keep reading about is more like residential real estate, where that's really, what did I read last week? That the average rent in the city of San Francisco is down like 31%, which probably will have some kind of a long-term effect on development, in that area. But
maybe I can live in San Francisco finally.
Yeah, maybe we can afford it, Rush. I don't think you're going to see people. You see people migrating out of the city right now. I think you're going to boomerang back. I mean, it's always going to be a hub for development, for tech. I mean, it's a place people want to live for a reason, and it's a place people have lived for a reason. I think people are shifting focus in terms of what they need from their household, from their work, where they can work. And I think we'll see some spread out into the suburban areas outside of San Francisco.
Great. But home prices for us are going to increase.
Yeah, at least short term. I think we're going to boomerang back, though. I think San Francisco will come back. You'll see rents rise at some point. It's just a matter of what's the timeline there.
Yeah, that makes sense. Yeah, I guess another thing that occurs to me is that as people are working out of home offices and sort of abandoning some of those places, at least temporarily, that's got to be affecting what they bring to you, right? I mean, there's some definite changes as they're structuring their businesses and their homes, really, right? I mean,
From what sense? Are you asking from the our employees are working remotely, or are you saying our clients?
I was thinking clients, but yeah, I know it's had an effect on employees as well, hasn't it? I mean, it's not just what they do, but the tax implications of that, I think, also are there, are they not?
They are, and I guess on one side that's pretty critical is you know, and I think everyone's experienced this. People are not just moving out of San Francisco; they're sort of moving out of state.
Yeah.
And you know, for Moss Adams, not a terrible, or like call it a big firm, the E&Y and whatnot. They're operating in multiple states as it is, so it's not a huge deal. But for any tax junkies on this webinar, you know, you're creating state tax nexus issues, which means you're filing requirements in different states as our people are moving into different states. So, you know, I think at first all the firms wanted to be very sensitive and like, hey, do what you need to, you know, we support you. But I think everyone, all the firms at least, had it in mind that this was a short-term solution. But when folks are moving to Idaho, they don't really want to come back. They're enjoying the high compensation of the California market, but low cost of living in another kind of state. And that's kind of what we're trying to reconcile now, Mark. And hearing, you know, Google, there's a lot of companies out there that are now making cost adjustments, pay adjustments to people that are moving out of state. But I think for Moss, you know, we're supporting our people where they want to live in their decisions. But the idea is we're hoping they're coming back.
Yeah.
Close to the office that they're aligned with.
No, that makes sense. Stuart, I want to give you a chance to respond too, but it just reminds me, I've read a few things about Barbados. Have either of you read about what's going on in Barbados these days?
No.
So they're trying to lure these people to come live in Barbados and work remotely while while the pandemic is going on. And then of course people get there and they realize, oh wait, now I'm an international employee, and I forgot to tell my company. And so now Barbados is thinking, oh well, as part of the deal, we'll help you navigate the bureaucracy. Like how they're going to do that, I have no idea. I guess obviously neither of you has been faced with an employee who's looking at that.
Call Stuart Hicks for tax planning.
Yeah, international. I'd call Raj and his team. They've got a great international team. On the movement, I don't anticipate any of our staff moving. At least they haven't told me that they're moving. We've had multiple staff buy or sell houses in the Bay Area, but I don't anticipate them moving out of state. I do have a lot of clients that have been moving out of state. Whether it's related to the pandemic or not is not really top of hand. It's more so tax based. I'd say some of my San Francisco clients that are thinking about a move more so are a reaction to the pandemic. But in general, California is a high tax state, and there's other attractive places to live. So
in general, it absolutely is the highest tax state out there.
yeah, and it could get higher. So
right.
Clients are reacting to that. They're asking a lot of questions. We've got. I'm sure Raj has this as well, but I have a template email that goes out to clients when they ask about out-of-state movement, of a checklist of items that you have to think about. We field questions every day. Yeah, we'll trade notes. That's a huge topic for my individual clients and some businesses. Most of our businesses are based in California, and it's not realistic for them to move out of state, but individuals are.
And that probably predates the pandemic, though. I mean, I was hearing about that a year ago. No, or
I have a lot more
now
inbound questions about it now. Yeah, it's always been a topic, or at least in the past 3 or 4 years, it's been a hot topic, but more this summer than ever. And whether or not those individuals are actually going to make a move is another thing. But the question and discussions have been had. So.
Especially with Stu, if you want to touch on this with the California law changes, prior that passed, I think June 30th, where they're suspending NOLs for high wealth folks. So I think a lot of high wealth folks are really considering a move out of California because their tax bill is going to considerably go up. I think just we agreed not to go into a lot of tax detail on this to not bore people, but that is significant legislation that was kind of put through local government. I don't know if you wanted to talk about that at all, or if you saw it in your client base.
Yeah, I see my client base as it's one of the conversations that's being had, right? That coupled with potential tax rate increases on high wealth individuals, potential wealth tax. California is not friendly to high income earners. So yeah,
I'll find it.
big
Maybe I'll
topic for
find it
the
someday.
discussion.
Well, there have been other tax law changes, I guess, both state and federal, I suppose, that have had an impact on people since the pandemic started, right? I mean, things that resulted from the CARES Act, stuff like that. Are you seeing that as an issue as well for your folks, your clients?
Yeah, I think Raj would mirror this, but consulting related CARES Act has gone up significantly earlier on in the summer, late spring. Uh, we One of the biggest change that I saw for my clients was probably commercial real estate and taking a look at accelerated depreciation that you could carry back and generate some additional refunds. But fantastic consulting projects related to the CARES Act. I mean, tax law change is difficult because you have to understand this law quickly so that you can consult clients and react. But it offers a lot of opportunities to value add for our clients. So
Yes, and
you got
the same answer, Stu, and it just kind of brings a little bit of PTSD thinking about the CARES Act because we just got hit with the pandemic and the PPP loan, and then they're like, "Great, here's the CARES Act," and I mean, tax folks, and we are human too, tax folks, right? And it's just kind of we're going through all the same things. Our clients are going through, working from home, trying to figure this out. Our kids are not in school; they're at home. And then we have to learn the CARES Act quickly, apply it, digest it for our clients. So yes, I just had a vent for a second, but now that my venting is over, yes, we did consult with our clients. For me, 163J, that was a big one. That's the interest limitation that, a lot of, before it was clients are generally subject to 30% limitation of EBITDA. And for corporate clients, that kind of got increased to 50%. So there was a lot of cash planning that was going on there. And a lot of private equity deals are planning around this now and what that looks like for future years without getting into more details about it. But significant planning opportunities with the CARES Act. It was just painful.
Wow. And then the other change I know that's had an effect on you, although that's I had no idea you felt so strongly about the CARES Act, was but we've been trying to plan this for a couple of months, this conversation, and one of the things that kept getting in the way was that you guys, whereas usually you have a season that sort of ends at a certain time, right? The season got extended, and it wasn't like, oh, good, you had more time to do what you usually do. It was like, no, now there's all this much more work that's filling that time, right? So because all the deadlines, the due dates changed, right? Can you talk about that? Has that been a good thing, or for you, if not for your clients?
I think it's good for some, not for others. The moving goalpost was very challenging to deal with and react to from a professional side as well as on the client side. It presented challenges in terms of getting information in so that we can actually have tax compliance on time. But I think the bigger impact to my clients in terms of their reactions were that 7/15 due date or extension due date. So you have to file an extension this year by 7/15 for individuals and corporations. It was 4/15. That 7/15 due date presented an issue where for tax payments, we had clients all of a sudden having to catch up on their 2019. So the balance due for 19 that was normally due 4/15, they got a few extra months to pay it. Fantastic. But you couple that with a Q1 quarterly estimate and a Q2 quarterly estimate, it was a significant cash outlay for some clients. Yeah. There were some hard conversations to have there because they're typically going to be paid on a quarterly basis. So that was one issue that we encountered. The moving due dates, I think moving it to 7/15 helped because our clients weren't ready by 4/15. So those that normally filed by 4/15 were not ready this year. They may not have been ready by 10/15, but we got them ready by 10/15 to get their tax returns in. Our tax season didn't end. Normally we start hard on February 1st, run till April 15th. You can take some vacation after April 15th. The summer months aren't as intense. And then starting about August 1st, you start ramping up again. This year, we didn't stop. So that was a big challenge. A lot of fatigue. I wouldn't say a significant amount of burnout, but we had people working more than they're used to in reaction to the moving due dates and the tax law changes.
Yeah.
Raj, I would assume same for you.
Yeah, this year was a really good case study for the argument that, people always say, man, if we could just smooth out busy season and spread the work and we don't have a busy season, what does that look like? And, I think this year was a pretty good case study, whereas in theory, it sounds fantastic. Let's take out 100 hours out of February, March, and April and move it into May, June, and July. Why that doesn't work? I think people are so used to, like, they're programmed to work so hard in February, March, and April and just have the summer, right? Have May, June, July, take vacations, go somewhere for 2 weeks, just let loose for some time and just recover, and then hit it back up in August, September, October, go hard, and then let loose in November, December. That this year, I mean, there was no break. Even though, let's say, charge hour requirements went down in every given month, but they kind of went up in the later months, you just kind of felt you're plugged in the entire year, Stu. And it was like, I didn't know what to tell our people. I was like, well, let's just say you're asked to work 1,800 on the year. We're not telling you to work more. It's the same number. It just spread differently across the months. And I'm a big proponent of going back to how it was. April, March, just have the deadlines how they are. Tax folks, it's going to be we're going to have to figure out a way to adjust to that. And back to, with the CARES and all those shifting deadlines, it was just a real big melting pot this year, I want to say. Yeah. So I think as soon as October 15th hit, tax folks you can just, send anyone at our firm an email between today and like the last 2 weeks, you just get out of offices. I think everyone's kind of checked out.
Well, isn't that?
It was a bigger collapse, as you see after a marathon, right? Of your people. They can't go anymore. So they need the time.
Man, that's a perfect illustration of that. What is it called? Parkinson's law, right? Work expands to fill the time available for its completion, right? It's not like having more time lets you be flexible. So listen, I want to make sure we have a couple minutes left. If folks have questions, by all means, feel free to ask them. Put them in the Q&A, which is down at the bottom of the screen, and we'll do our best to address them. Keep them clean, I guess, or at least we'll have to translate them for you. Let me see. The other question. Right. So we talked about the due dates. I'm cheating from my notes here now. So so what do you see coming up for the next year? I know we've got an election coming up next week, and conceivably that could restructure what you do. Is that fair to say?
Big year. Yeah. Well, we got done with tax law change in 2017, end of 2017, implemented in 2018. We had CARES Act this summer. And now we could have more tax law change in the next couple of years, depending on how the elections go. So I don't anticipate a slowdown in our business anytime soon. I think next year is going to be difficult, and it'll depend how difficult it is based on whether or not we have a Biden presidency and whether or not we're still dealing with remote working due to the pandemic.
I would say difficult in a good way for tax people. For anyone who's on the call listening right now and you're interested in tax, whatever it is, or in school, just graduated, the profession's not going anywhere. So I would say the firms are going to be busy. So it's a good thing for tax people. Yes, when I say the CARES Act was difficult, it was, but it's what keeps people employed. It constantly kind of law changing, learning it, right. Dissecting it, educating people on it. It's what we do. So it's a beautiful thing. But I'll take the optimistic view on this one. I wasn't on the CARES Act, but on this one I will be. A lot to do in the coming months, so we're all anxiously waiting. Especially for tax reasons, what's going to happen with the election?
Right. So you're not arguing that this is all a good thing for you, are you?
I'm arguing it's a good thing from the sense that it's going to keep our people busy and it's going to create work for people. In terms of the time we're going to spend understanding it, I'm just going to call Stu and say, hey, Stu, what's your interpretation of this?
That's always helpful.
We can coordinate on the intellectual challenges of ever-changing tax law. To be honest, that's the fun stuff, right? Looking at these new laws, seeing how we can use it to the advantage of our clients. That's enjoyable. That's at least something that I enjoy doing outside of the routine tax preparation. Consulting side of things is really, I think, what Raj and I key on.
And just a quick example on that too, just something that you just said, kind of, with CARES Act, there was the NOL carryback change that you could do through June 30th. We did an NOL carryback. And for those who don't know what that is, you basically, if you have a net operating loss, you can carry it back for how many years, 5 years or whatever it is. And we did that it was unexpected. We did that for a client, and they got a $175,000 check in the mail. And when we told the client, they were expecting an amount due, but because of this legislation that came out, thought about it, did it, sent them. I mean, I've never gotten an email like that. It was like, oh my gosh, this is life-changing, right? So it's like, we never talk about those type of successes on these type of things, but more often than not, our clients are so pleased with forward-thinking tax consulting, and that's kind of what makes this job fun. It's not sitting around doing tax returns day in and day out.
Right.
Yeah. So are there, you mentioned before about, how the hospitality industry is sort of taken hit. Is there an industry that's actually, besides the tax professionals, that's actually sort of come out ahead during all of this? Is there someone who's benefited?
Yes, I can't think of, I know there is, because just give me a second to think about that. I generally think like tech companies, Zoom, right? So let's talk about Zoom. No, but I think a lot of my, I don't do a lot of tech, but I generally think tech has done okay. We've seen a little bit of growth in tech. My real estate clients, to what Stu's saying, we've seen 5% growth in real estate at our firm. I don't know, Stu, if I bought you time to think of any of your industries that you think have gotten significant growth.
It's actually a really tough question, because I think it's such a short time period that you can't really judge any significant growth over the summer, because I think we have to look at what it's going to be for the next 12 months, right, to really see what the impacts of this will be. The real estate side, I guess, for me is going to be where I've seen the most activity, I'll say. Not necessarily growth, but activity. On the tech side, I do a lot of tech, but it's mostly startup work. When it gets too big, I send them over to Raj. There's still investments being made. There's a lot of angel investments coming in, a lot of venture partnerships that are being put together. But I'd say activity-wise, real estate's where we've had the focus for my clients.
Dude, there's a question in the Q&A that I actually think is a really good one.
Yeah, I was going to ask you, but please, by all means. You're talking about the AI questions?
We can talk about AI. I was going to talk about training for our staff.
I think they're related. Yeah. They're the same person asked them. So thanks, Bella. So the question, I think one follows the other. The first question is your firm moving toward using more AI, artificial intelligence, on tax return preparation, whether to free up more time or otherwise for consulting services? But then the follow-up is, and do the younger staff have concerns on not getting basic training on tax return prep if you are moving toward a more automated process, whether that's AI or not?
Yes. Go ahead, Stu. Do you want to take this one, or I can address it?
You can go ahead, because I think you guys are a little bit more forward thinking on that, and we're reacting a little bit more on that. So I'd love to hear what you actually have to say, Raj.
Yeah. So I think when it first hit, when we were all talking about AI, this was kind of big, right? And, we were trying to get ahead of this. To date, I don't think we are moving towards AI. Like we haven't seen it impact us yet. Whether it's in 3 years, 5 years, we don't know. At some point, AI is going to play a factor. We just haven't seen it really affect trainings and all those type of things yet. Do I think it's going to happen in the next 2 years? I don't. But I don't want to be naive enough to think it's not in the near future, 3, 5 years. I think there's going to be some impact on the business. In terms of trainings, when that happens, I think, again, the staff role is going to be redefined. You know,
Yep.
is it going to be more of a conventional data entry, analyzing work papers, putting it into the software? Perhaps not. Maybe the training is going to be more about tax law, or you know, I don't want to say data mining as a punchline, but more kind of data-driven analytics type of a role. But again, that's in the future. I don't know we're there yet. It would be my answer.
I think piggybacking on that, a big part of the AI could be there's two ways I see it, and I'll focus on the individual clients where we get information from the individual client, we get that scanned in. The software, Raj and I use the same software, but the software has the ability to use optical character recognition, read that tax document, and put it into the tax software. It's not great. It's okay.
I was gonna say, come on, man.
Yeah, it's not great. It doesn't replace a human, but it does shift the focus on our staff members to become more of a reviewer of work as opposed to just data entry. Data entry is not fun. It's not that enjoyable. It's important because you need to know how to go in and fix something in a tax return. I will still go in and assist staff members with issues with the software because you need to know how to use it. You can't just rely on a computer to get everything put into the system. But I think we may see connectivity, which brings up security issues, but we may see connectivity with maybe investment groups that allow you to download information that feed directly into the software, the tax software that we use. So I think it's going to be a shift in focus for those beginning staff in terms of what their day-to-day operations are and what they're doing. But I think it moves them into a more enjoyable aspect of the tax preparation consulting process.
Interesting. Okay. So, no, that's good. Thanks. Those are good questions. We have a question about Prop 21. But I guess we're going to see some impact from on the state level as well, and city, right? In these cases, depending on which way the votes go. And I think they're very close in a number of these as far as, just changing taxes, business taxes and property taxes. And there's a whole bunch of implications for those things.
Yeah, I'm generally just not to be coy about it. I'm going to sidestep, Mark, any props and state and local legislation on the ballot right now. If I'm not up to speed on a topic, I just don't want to speak on it just yet. But we'll find out.
Yeah, we'll have to see where it goes.
Yeah, no, there's still a lot, right? And then how it's implemented is also a question, not just when it's passed. Yeah. So listen, I'm aware of the time. We've been talking for a while, and this has been great. Wait, I think there's one more. No, where I think we're. Let's see. This is actually a good practical question because we have a number of GGU folks here. What kind of knowledge besides the tax code do you think new tax associates should learn? Do you think there's any benefit for a tax person to learn Python or any of the other software that's really popular for data mining now and data analytics?
I think that's a tough question. It's kind of looking into the future. For what we're hiring today, it's not necessarily like a value add today. But I think in the future, as the industry does pivot, I think those types of skills are going to be potentially much more crucial. It's tough to say today, Mark. Like when we hired all the folks we interviewed just now, accounting degrees, same kind of things we're looking at. I didn't see anything coming through our campus recruiters that was suggesting, hey, we did see a shift on some people going into more data-driven majors on campus, which tells me that they're preparing the next few years for the skill set to be different, but it hasn't hit yet. So if that's kind of a roundabout answer, but
it sounds like it wouldn't hurt to be up on some of these programs, but you're not seeing their incorporation to the day-to-day just yet.
Correct.
Yeah. But there's definitely.
Yeah, I'd mirror that answer. I don't think we're hiring based on that right now, but I don't think it would hurt you.
But there's going to be some disruptor who comes along and it's all about Python and then right upends the whole industry. Isn't that how that works usually? I don't know.
Yep.
Anyway, listen, this is great. I want to thank you both. Raj Gupta from Moss Adams, Stuart Hicks, who's at KWH. I'm going to say the whole thing, Krohn, Waters, and Hicks. We have put their LinkedIn addresses in the chat. It's at the very top. We posted it right at the beginning. So, and I think we've done that because they both said they're open to be contacted through LinkedIn, right? Listen, this has been, I really appreciate your time today. I know this is a busy time too. There's not like a not busy time. This was like you had an hour that you could spare to talk today, right?
Anytime, Mark. This was fun to do. Appreciate you putting it together for us.
No, this is
thank
great.
you, Mark.
Thank you. And so, as I told everyone before, this will be posted on GGU's YouTube channel in a couple of days, and then it's also going to be part of our new podcast. Which I'm saying that because the person who's responsible for putting that together is listening, and so now he has to do it. So anyway, thanks again, guys. Hang on one second, and we'll say goodbye to our attendees, and really appreciate your coming. We've got go to the GGU Presents page for more upcoming episodes or shows, and we've got a couple of other webinars and presentations that are posted there as well. All right, so thanks everyone. Good to see you all, or
thank you.
talk to you all. Okay, take care.